What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there. All right. What's up, guys? Happy, what is this? Wednesday, hump day. How could I forget that it is hump day? We are back, baby. If I can say one thing, it is that we are back at it. Damn, the market is flying. GameStop is flying. GameStop 330. And we're bringing Rod Alsman back. Rod Alsman, the face behind, the face in front of, I don't know what the right phrase is. But the GMEDD.com guy, GME, GameStop, DD, DueDiligence.com. That's him. He's coming back because the thing is ripping, roaring again. As producer AB said right before the show, we are 110% back. So stuff we're going to cover today. Of course, we're going to do some GameStop. I'm going to recap Jonah Lupton's Celsius thesis into their earnings tomorrow. I'm going to throw a new idea out there on banks. I'm long Bank of America right now, have been for several weeks. I'm going to talk about some of the bank stocks and some opportunity there. We're going to do an example of a covered call. I'm going to sell a covered call live in the portfolio, talk about why I'm selling the covered call. We're going to talk Roblox, and then maybe, just maybe, we'll have time to get to PE ratio and why I think PE ratio is the most useless metric out there. And we can go to battle on that one. 12:30, Conor O'Brien, CEO of O-Shares. O-Shares, that's Kevin O'Leary's, Mr. Wonderful's ETF company. He's going to be joining the show. 1 o'clock ET. Rod Alsman, again, the face behind, in front of, whatever the right phrase is, of GMEDD.com is coming on the show. Possibly bringing a whole crew. From the squad, the whole bet squad for us. And then the CEO of Charge Enterprises, public company CEO, joining us at 1:30 ET today. And of course, I've got my co-host here with me, Mr. Drew Levine. What's up, man?
How we doing?
We're doing good. We lost you a little bit here. Give us an audio test.
Can you hear me? Is the Wi-Fi shit?
It's not great. Where are you? You look like you're in some dirty place. It's very dark.
It's my apartment.
Oh, okay.
It's a little dark in here.
All right. Well, I appreciate you coming on to hang out with us. I just ran through the agenda. Again, exciting today. Rod Alsman, GMEDD.com, coming on 1 o'clock Eastern. We're going to talk about some other stocks before that. But without further ado, guys, I'll remind you what the point of the show is, which is to be the trade idea resource. That's what we're going for, right? We want this to be a better trade idea show than anything out there. If we're not delivering, call us out. I'll be writing down all the ideas as they flow today, all the stock ideas, and dropping them in there, guys. Smash the like. And, of course, we are going to have some gimmicks today, too. Maybe we'll do some Benzinga Pro giveaways. We are going to do an update on our chat challenge where Zinger Nation is going head-to-head. What's up, Spencer Israel? Spencer Israel say no pro giveaways. You know what I say to Spencer Israel? Hold on.
It was at this moment that he knew he fucked up.
That's the problem with Spencer Israel right there. Boom. All right. So that's the deal, guys. Let's dive into this. First things first, I'm going to throw a bounty out there to the group. I'm going to defy Spencer Israel, and I'm going to say Benzinga Pro giveaway right now. Benzinga.com/options. All right, check this out. Add to stream as you see my screen. All right, guys, we have this new unusual options activity page on Benzinga.com. Check it out. It's Benzinga.com/options. I'm going to drop the link in the chat there. So you can check this out. What I want is feedback on this. We want this to be the best options page on the internet. That's what we're going for, right? I've spent a lot of energy working on this page over the past couple months. New things that we've added. We recently cleared out all the ETFs and big tickers, right? It used to just be a ton of SPY options. Okay, that gets boring after a while. But now you got all your individual stocks. We also added a bullish bearish sentiment here, whether or not the options trade that went through was bullish or bearish. And again, these are all unusual options trades that have taken place on the market. When we say unusual, what we mean by that is it was a massive size. or the strike price was way above where the stock is currently trading at a day after earnings, something along those lines. So again, benzinga.com/options, link, dropping it in the chat now. Hold on. There we go. And so here's the deal, guys. Email powerhour@benzinga.com. That's powerhour@benzinga.com with how we can make this page more useful for you guys. If whoever does that, we're going to pick one random winner and they're going to get a Benzinga Pro. Spencer Israel is shaking his head right now. I see him. He's giving me menacing eyes, but that's the, here, Spencer, come here. All right. I'm calling him on to defend himself. Spencer, why can't we do Benzinga Pro giveaways anymore? That's what I don't understand.
The pro sales team is mad at us for giving away too much Benzinga Pro. Okay. That's the answer.
All right, we don't care. So we're gonna keep doing it. So benzinga.com/options, guys. Link is in the chat. Again, we want this to be the most useful options page on the internet. Calling out, giving you guys trade ideas, spotting where there's some opportunity in the options market. So go ahead, powerhour@benzinga.com. Give us the feedback on that. Some lucky winner is gonna get a Benzinga Pro, even if the sales team is mad at us. So all right, there's my housekeeping. There's my ask for you guys. Now for the next 90 minutes, we are in your mercy. We'll talk about whatever you want to talk about. We're going to be dishing out several ideas throughout the course of the next 90 minutes. That's my ask to you. But Drew, first things first, GameStop still ripping. 5-day chart here on the screen. Where are you at with this one?
Yeah, I have not been following the second rip too much here. I know it's been picking up. A lot of people talking about it. Pretty wild stuff, right? Not in the news as much as it was obviously when it first ripped, but this thing looks just as strong, if not stronger. So pretty wild stuff. What's your thoughts, Luke?
The chart is beautiful. So here's a 1 month chart. I mean, look at that. There's no stopping this thing. Anybody out there in Zinger Nation, that's all you here hanging out with us every day. Anybody who wants to short this stock, please call me first. My phone number is 911. It's 911. If you want to short the stock, please dial that phone number before you do it because you need some help. Never short a stock that moves like this. The thing is running. If you want to hit it on the long side, I think go ahead and hit it on the long side. But I'm curious. I asked this one yesterday. I said, if you guys are long GameStop, hit the 1 in the chat. If you're short it, hit the 2. I want to see where everybody's at. Yesterday, long 1, not in it at all, hit 2. Yesterday, almost nobody was in the stock. We've moved another 50% since then. So I'm curious where everybody's at on this name. I mean, it has some serious wheels. And then again, guys, Rod Alsman, the guy behind GMEDD.com, that's the site that really got the intel out there on GameStop, blew up in Wall Street Bets and got the thing moving. He's coming on at 1 o'clock to talk to us about the stock and the company. So there we go. Let's see. Yeah, nobody's in this thing still. All right, somebody's buying it. It's not Zinger Nation. I don't know who's buying it. Maybe Rod will convince us otherwise. But all right, there's that one. All right, and then what's up with Roblox, Mr. Drew?
So Roblox is a super interesting company, right?
Wait. Okay, how do you say it?
Roblox. I don't know.
Okay,
Roblox.
all right.
It's definitely just Roblox.
Yeah, Roblox.
All right, tell us about the company, and then I'll talk about some of this opening we're gonna have.
Yeah, so the company is kind of like Fortnite in a way, right? So they sell a lot of in-game stuff, a lot of $19 Fortnite cards. People like that stuff. So they also do a lot of advertising stuff. They almost hit $1 billion of revenue in 2020. They're really taking off. Little kids love this game. It's been around for a long time, and it's just, it's kind of a cornerstone in the gaming community. It's almost like a Minecraft, one of those games. So, it definitely has a lot of interesting potential. One thing is, around 30 users. We're not talking the people that made the game, but people that just play in the game grossed over $1 million in revenue, right? These are basically the users. So like people in the game, they were like selling in-game items and stuff to each other and trading, and they made over $1 million doing it. 30 people. Like, it's basically a mini economy going on. It's a super interesting thing. It's pretty wild. So they still are losing
So is
money.
it basically like people can develop products on top of like the Roblox infrastructure and create different skins or something along those lines?
Yeah, I believe so. It's, there's in-game trading and all that stuff.
Yep. And look at Jonas in the chat. They're saying nothing says cash cow like a game marketed to kids. The only thing that I would say is more of a cash cow is a game marketed to adults, aka casinos, aka online gambling. Which the online, we'll get back to Roblox in a second. The online gambling stuff freaks me out. We have it in Michigan now. I downloaded it just to check it out. Put $100 into an account. I lost like $45 playing blackjack on the toilet in like 9 minutes. I mean, it's like freaky how quick that was, and I was hitting the min bet. Yeah, it's sort of nuts. But all right. So as an aside, I'm cautious about the social impact of online gambling. But all right, let's talk about the IPO, the opening of the stock. It's not actually an IPO, it's a direct listing, which means the company isn't raising any money. They're just making their shares available for trade. As we mentioned yesterday, this stock is probably going to start trading at some point during the show. So, of course, we're going to have laser eyes on it. Laser eyes on the Roblox, waiting for that IPO to open up today. So here's the deal. The listing priced at $45. So that's the price at which they established. Here's the value of the company. You know, we're getting the first people who are going to start trading shares. They're going to come in at $45. Okay. And we've got some really bullish indicators here. So check this out. We're looking in Benzinga Pro and look at, we see shares indicated all over it, right? Basically what that means is the work that's happening right now behind the scenes is the market makers who are going to be covering the stock are working to stack up buy and sell orders, right? On the top and at the bottom, and figure out, okay, what price is in equilibrium so we can get the stock open for trading at the equilibrium and then let it be off to the races from there. So that's the work that's happening behind the scenes right now. The fact that, you know, the pricing was at 45, the first indication of open was 60, then 65, then 67, and now we're at 68 to $70 as an indication. I mean, what is that? 60% higher. Let's do the math. So it's 55% higher than where it priced at. Super optimistic sign for early trading on this stock, right? If I had to hit it one way or another, I'm not going to because the volatility is a little bit too high for me. But if I had to hit it one way or another, I would hit this thing long on the open because, again, it shows that there's a lot of pent-up demand here. And the people who are getting in on this opening trade would only be doing so if they expected some sort of price appreciation. And they're willing to pay 55% more than what the direct listing priced at. So what exact time is it going to open for trade? I would guess somewhere around 1 o'clock Eastern. I don't know if you have any other opinion, Drew, but noon to 1:30 seems to be when these things open. Sometimes they'll go as late as like a 2:30. But I'm not super. I don't think it would go that late. Around 1 o'clock is my best guess, and of course we'll be watching it closely.
Yeah, I kind of get some snowflake vibes, some JFrog vibes. You know, this thing. Oh, we're gonna list it higher. Nope, we're gonna list it higher. You know what I mean? Like the hype is definitely there, and the fact that the listing price is already, you know, came up quite a bit is a very bullish indication. But you know, as we saw with these in the past, they might pop for a minute and then the next week kind of dump off. Right? IPOs are a risky business. You know, Facebook, great company, had a terrible IPO. So, you know, IPOs in my eyes, if you're getting on the day of for a short-term game, it's very gambling. You don't know how the stock is traded in the past. You don't know how people are going to trade it now. So if you really like the company long-term, I respect you if you want to get in, hold for a while. But, you know, if you're just trying to make a quick buck, it can be very hit or miss. So just be careful.
Awesome. And all right, guys, if you're just joining us, I'm going to ask you to go ahead, smash that like button. What we've got coming up, I'm about to hammer 2 trade ideas, 2 stock ideas. Drew's going to hammer 1 idea, and then we're going to sell a covered call. We're in the live portfolio. Here it is. We look at this every single day. No, it's not a paper account. This is my real Interactive Brokers account. We look at it every single day together. I'm going to sell a covered call in the live portfolio, talk about why I'm doing that, what stock I'm doing that on, etc. All before 12:30 Eastern when our first guest joins us. And then 1 o'clock, 1 o'clock ET, yeah, go Rocket, go baby, 42% unrealized profit so far. But then at 1 o'clock ET, Rod Alsman, the face in front of or behind, I don't know the right phrasing. Somebody tell me. GMEDD.com is going to be joining the show. But all right, without further ado, I'm going to hit my 2 ideas, 1 minute each, rapid fire ideas. First air horn of the day for that. There we go. All right, first one, ticker CELH. All right, Celsius Holdings. If you don't know Celsius, they are an energy drink company. They make, I drink this energy drink every day on the show. They make a competing product, right? Just like any other energy drink that we see at any store. What I think is compelling about this is that they have earnings coming out tomorrow before the open, which is why I want to cover it now. This was one that Jonah Lupton pitched on the show last week. Basically, here's the thesis into earnings is they should absolutely dominate the estimated revenue. So right now, the market has their revenue estimate for Celsius at $34.6 million. Last quarter, they did $36 million. And look at this growth that they've been having here. I'm going to zoom us out a little bit more. Sorry if that's too small. Here, we can do that. There we go. Check this out. Check out how much revenue growth Celsius has shown over these past several quarters. I mean, they've jumped from 16 million of revenue to 36 million of revenue in like 7 quarters, somewhere around there. And the market is only expecting them to do 34.5 million. That's less than they put up last quarter. And again, they have this amazing growth trajectory that they since being a public company, the last time that they reported a slowdown in revenue was, 2018. November of 2018. Since then, it's been off to the races where every quarter has been growth. So I think that this earnings estimate number seems like a layup. And that's why I think that this stock is compelling into earnings. I personally am not going to hit it on the long side. The reason being, I'm still a little bit concerned about the market in general, and I'm not trying to take on more risk to the portfolio. I'd like to clear some out, and that's why we're going to do this covered call example in a minute here. But first stock that I'm going to pitch today, not stock I'm going to pitch because I'm not hitting it. I'm not going to make the live trade. But idea that I'm going to throw out if somebody has a risk appetite, look at Celsius Holdings. Stock got hammered in the general downturn. The earnings estimate seems pretty easy given their growth trajectory. And again, the fact that they put up more than that last quarter. So ticker CELH. There's one for you. Idea number 2 that I'm going to throw out. We haven't talked about banks in a long time. If you guys have been watching the show there we go. Wrong one. There we go. BAC. If you guys have been watching the show for more than several weeks, maybe about a month ago or so, let's find this Bank of America. We went long Bank of America, ticker BAC. Where is this one in here in the live portfolio? And it's been awesome for us. Here, let's sort by unrealized profit. All right, flip her around. All right, where are we at? There it is. All right, Bank of America. We went long Bank of America with 35 strike January 2022 calls. As you can tell, it's been an awesome trade for us, right? We're up 200% on the trade. I think the thesis for banks still stands. So going back to the previous note I said about not wanting to add more risk to my portfolio right now, I'm we had some of these days where I was down, 10,000 plus on the open, right? Doesn't feel good. Not comfortable with that type of risk, and that's why I'm transitioning my portfolio to be more conservative. Banks are one of those more conservative plays. If the market sells off on continued interest rate concerns, let's pull up a 1-month chart here of Bank of America. That is good for the bank stocks, right? You see this nice, beautiful price climb in Bank of America here. That's the one that I hold. While the rest of the market was dumping, again, this is a month chart here. If the rest of the market sells off on interest rate concerns, bank stocks will do well. The higher interest rates are, the more money banks can make from lending activities. That's why they make most of their revenue. A lot of them are trying to get out of that because interest rates have been so low. But still, the lion's share of revenue for most banks comes from lending activities rather than other fees or services like investment banking. So there's the bank trade there. The reason why I selected that 35 strike price was, check it out, it was right around the high of pre-COVID. And basically what I suspected when we put the trade on is, all right, the stock's already at $30-ish. Interest rates are going to increase sometime over the next year. We have the January 2022 calls. So there's no reason, if it's already at 30, interest rates go up. There's no reason why it can't cross that $35 high pre-COVID. We are now officially in the money on that trade. So if anybody followed me into that one, there's the thesis there. The new idea that I'm going to throw out. So that's first half of the idea. The new one, small banks, I think are really interesting as well. I own a basket of 10 small community banks in my portfolio. The person that I turn to for bank ideas especially for small banks, Tim Melvin. Let me get this up. Marketfi.com. All right, Tim Melvin, partner of Benzinga. He runs an amazing service where basically he analyzes small bank stocks. So I go to him. I went to him. I said, hey, what's a small bank idea that I can throw out on the show? And he gave me ticker MSVB. That's Mike, Sandy, Victor, Bravo. So I'm only teasing one idea. Again, I own a basket of 7 of these right now. The reason why this bank is compelling is that it's a really good takeover target by a larger community or national player, especially as interest rates increase. And banks have more cash flow. They're going to be doing acquisitions to expand their footprint. MSVB owns a ton of really good assets, right? Their default rate on their assets or their default risk on their assets is very low. The stock is trading at 85% of its tangible book value. So they literally liquidated everything today. They had no ongoing operations, no ongoing cash flow, no ongoing dividends. You'd get 85% of your money back approximately. So again, second idea I'm throwing out, MSVB. So first one, Celsius. Second one, banks in general. Bank of America, one I still like, plus ticker MSVB. So those are my two-minute ideas. Drew, what's yours? And then we're going to go on to our covered call example.
Yeah, my stock is in mode.
No, wait, hold on. I might have to stop you. Somebody in the chat saying Gme halted. Let's see.
Ooh.
Yep, we did. GameStop halted. All right. The breaking news, Benzinga pro.benzinga.com. Looking at it now. GameStop is in fact halted. Circuit breaker to the downside. If you don't know what a circuit breaker is, it basically means that there's too much volatility in the stock and the exchange stops trading. It's saying market's freaking out. We got to slow this thing down. It's going way too fast. So we're going to stop trading right now. These are 5-minute halts. At least the first 3 of them are 5 minutes long each. You can see the stock was halted at 12:23 p.m. Eastern on the dot. So 12:28 is when the stock will resume. Let's look at this price action. It's not pretty. Check this out. It collapsed from 340 to 302 in less than a minute. These are minute candles that we have here. Let's look back and see if there's any historical price context to that 340 level. Not really. And we saw how choppy. If we look back in history, we saw how choppy the stock was. Back when it was around these levels in the past. I mean, look at how the stock is up and down $200 in a day. We just had a $40 move here. Sorry, let me zoom us back to today. Here's the 2-day chart. So 12:28. We're gonna watch that one. And cost ticker KOSS also halted on the same news. I wonder if Rocket got caught in that as well. Let's look at Rocket real quick. Yeah, Rocket 28.50 to 27. Rocket is not halted. But all right, so we'll be watching those. All right, Drew, you've got until 12:28 because we're going to watch this GameStop open closely. But give us your idea while we wait for that one.
All right, I'll keep it quick. My stock is in mode INMD, non-invasive.
Wait, ticker me again.
INMD.
India, November, Mike, Delta. There's his ticker. And again, smash that like, guys. Share the stream. Drew, keep going.
So really interesting stuff from this company. Non-invasive, almost plastic surgery, beauty surgery, whatever you want to call it. Company has been taking off, posting up pretty decent earnings growth, all that stuff. And, I really like the concept they're doing here. I think a lot of people, are into that stuff. Not me, maybe Luke, I don't know. But, they're growing very solidly. If you look at the chart, very steady up to the right corner. I just think all good things coming here. Very reasonable, with
what
60%.
What time horizon chart do you want me to look at? There we go. Okay, here's 3 months.
Yeah, with 60% revenue growth, and they do have a PE of 40, even though you said PE doesn't matter. Maybe price value can more about 13. Not too bad, but they have insane profit margins, especially for a hardware company. I really like what they're doing.
And this is somehow gaming related?
This is not gaming related. This is plastic, almost like plastic surgery.
Oh, okay. So it's medical. All right. So the reason why I was asking gaming related, any gaming related stocks, we get this Roblox open and it's big. They are going to move with Roblox. But wait, Robinhood. Somebody in the chat saying Robinhood may be restricting trading again for GME. Totally unconfirmed.
What is GME at right now?
We're halted right now, Jason. So look at this chart. We just fell from 340 to 302 in less than a minute. Halted on a circuit breaker to the downside. 1228 is the open here. We're watching this one closely, and of course, Rod Alsman, the brains behind GMEDD.com, is going to be joining the show at 1 o'clock Eastern to give us the beat.
Yeah, because we have O'Leary ETF coming on.
Yep. Connor
soon.
O'Brien's going to be joining us in a minute here.
Connor O'Brien. Yep, absolutely. And so this is crazy. Are there any tertiary plays being traded right now off of
GME or Roblox?
GME.
Yeah, so check this out. Rocket, ticker RKT. We just looked at this one.
Wow.
When it's still up on the day, right? Still a nice green day on a huge stock like this. But when GameStop just sold off hard, that one did. Ticker KOSS. Cost also halted. Circuit. Oh, Cost just reopened. Right as we were loading the stock.
So
all right, GameStop just opened too. Let's look at GameStop.
Is Tootsie Roll gonna play again?
Shit. All right, here's GameStop reopen, guys. These are 1 minute candles that we have up on the chart.
Cost up 66%. Wow.
GameStop is going to catch a bit at some point here, I imagine. But I mean, we're in free fall. It's
SS
settling out a
words.
little bit.
I still have KMPH. I mean, that's how I do this, guys. I still have KPMH. KMPH. I sold a little bit up 20%. Look, KMPH, Luke.
Right, look at that
KMPH.
one. Somebody's saying that GameStop's halted again. It's not. We're no, it's not halted. Spencer Israel, not halted. It's still trading. KMPH, Chem Farm, ripping. On news or on what? No news. Interesting.
I mean, it sold off too much on, had the FDA approval. Some short sellers have been hitting it pretty nicely.
Yeah, here's a 1 month daily candle.
Hey, Luke, while we're at it, what new pages on Benzinga should these guys check out? We got the benzinga.com/options. We got we don't have a central calendars page yet, but we have the ratings page. What else do we have?
So we actually threw out a bounty at the top of the show where we said, email us all the feedback you have on benzinga.com/options, and some winners getting a Benzinga Pro. So you want to just hammer through a big list of them?
Yeah, go ahead. And then
all right,
so
we have benzinga.com/options. And then we have benzinga.com/analyst ratings. We'll let that one load. Benzinga.com/earnings. There might be a calendar in that URL string. Let's see. So here's the options page. New features added to this one, guys. We added this bullish bearish column to make it really clear if the options trade that happened is bullish or bearish. We also filtered out all the repetitive tickers because at first it was flooded with SPY and AAPL almost exclusively. So now you've got way more diversity of stocks and much more of a signal by taking those stocks out of it. And we also added a couple more columns in here for people asking for more data. Here's the analyst ratings page. All your analyst upgrades and downgrades for the day. You want to see all the stocks that were upgraded. Boom. Click this little upgrades button up here at the top. All the downgrades. Click this little downgrades button right here. See all the stocks that were downgraded. I'll drop this one in the chat here too. How's that? You want to keep going?
No, I think we can bring in the guest, but I do want to say thanks to the chat. Someone gave me this stock, MGNI. Actually, that was from my clubhouse that I hosted. MGNI, it's up 17%. Magnite, they do something with what was it? Oh yeah, the connected TVs advertising stuff. I just wanted to give that one a shout out. MG, yep, you had it pulled up. All right, let me do.
GME, I think, is halted again now.
All right,
so GME halted again. We don't have a code. I'm guessing it's a circuit breaker, so 12:35 ish. Is the time to watch on that one.
Love the Benzinga Pro thing. Vivian just texted me. She still thinks that KMPH will be bought out. All right, special guest. All right.
There we go. Connor O'Brien, welcome to the Power Hour, man.
Hey, good afternoon. How are you?
Good. How are you?
All's great.
So we got OGIG, OUSA, OEUR. Are you working from home or is that the office? What do you got going right now?
This is office.
I was wondering if that was your wallpaper in your bedroom or something in your home. That's
I got that too.
Yeah. Got it. So what's new in the markets? What are you guys excited about these days?
Well, what are we excited about? I mean, basically, what we're hearing from people is they want to go this tech pullback. How temporary or persistent is it going to be? And that's one of the things. I think another one is, what are people going to do with the $1.9 trillion that starts to hit their direct deposit bank accounts on March 22nd, March 29th? Those the checks, paper checks go out on the 29th. The electronic transfer begins on the 22nd. So that's kind of a big deal. How much will that money flow into the markets? I think people are wondering. Boring stuff, yield curve, your crowd probably doesn't really care too much about, but OUSA type of investors want that steady eddy dividend growth type of investment.
What kind of dividend yield is it?
Yeah, it's about 2% with a 10% growth rate.
Got it. So
the 2%. Whole story on OUSA is, if you want to have income that grows while you do whatever else you're going to do in life, your income level on OUSA is going to double something like every 7 years. So, okay, it's only 2.5% today, but it'll go to 4%, 8%, as it just sits there and grows. So it's not really a trading type of vehicle. It's much more of have a cornerstone of your portfolio that is simple, steady eddies.
Got it. And go ahead. Sorry, we're going to say.
I was going to say what might appeal to your audience. We can talk a bit about that for the people that want that steady eddy cornerstone. But we could also talk about OGIG, where there are 60 plus stocks, an interesting shopping list. People can go look at it. They don't have to buy the ETF. They can look under the hood and see what's in there that's really interesting, because the index methodology does a great job of screening and selecting high revenue growth stocks. And when you look at tech, e-commerce, internet services, revenue growth is the primary driver we've identified, a driver of performance.
Got it. And that's OGIG, the 100 the 1 year return is about 108%.
Yeah, exactly.
And so revenue growth is what you guys are using as your identifier. So Luke, did you just share that just now?
Yep. Yeah. I just threw up on the screen so some of the top holdings on OGIG. I'm on oshares.com/OGIG. It's Oscar Golf, India Golf.
Nice.
Yeah.
So there you go.
So what are some of the bigger ones? Amazon, it looks like. Alphabet. How often are you guys trading this? Are you guys doing like a Kathy Wood daily trades, or how often are you doing that?
It's driven by index rules. So we did a massive amount of research on 10 plus years of history on all of the stocks in these sectors, but then the index drives the portfolio, and it's a quarterly recalc of the portfolio and a reallocation. And so what you see is you get a few names at the top that everyone's going to recognize, but 80% of the portfolio is allocated to names that most people don't recognize. It's so different than the tech sector index trackers, so different than the NASDAQ 100. It's about 80% different. And so, for 2 years, it's owned stocks like Zoom and Meituan and Pinduoduo and Mercado Libre and Shopify, all these names that people start to know now that they're worth 100 billion plus. But the methodology does a great job of finding these before the rest of the world finds them.
Got it. Yeah. And so how do you guys go about finding these things? Like, how do you go about it? What do you do to try to find these picks?
Thousands of stocks that are in it's just called the database in the category potential. They have to be large cap. And then they get included as possibilities if they're in 8 of the right subsectors, from digital advertising and e-commerce to cloud computing and so on. And that doesn't mean they're in a portfolio. It just means that they'll get considered. The financial metrics then determine if they're in or not. So does their balance sheet and profitability measure up? Does their revenue growth measure up? Those that do measure up well are in the portfolio. Then the weighting is very different than typical. It's not generic market cap weight. It's in fact a blend market cap adjusted for the quality of the business, the strength of the revenue growth. So 2 stocks that make it in, one that's got stronger revenue growth, they're both good, but one's a little better on revenue growth, it's going to have a higher allocation, even though the stocks might be the same size. Or I'll pick on another example, Booking.com or Baidu. These are stocks that used to be in, they got downgraded so much on rev growth, they got pushed almost out of the portfolio because the revenue growth helped identify that those businesses weren't doing so well. And so it's active in the sense that the rules influence the portfolio. It's not just generic buy everything market cap weight.
Okay, so let's, and again, guys, if you're just joining us, we're talking ETFs, we're talking OGIG is this ticker specifically, and so the criteria to get a company into the ETF is they either have to be a large cap or have the potential to be a large cap. They need to be into a high growth or one of like the growth tech sectors. And then the stock is weighted not just if by a market cap, so you're basically just owning Apple. It's weighted by how much is the company actually growing. Is that a fair way to summarize it?
Yeah, you've done a pretty good job summarizing. Our website has the entire list of all the stocks. People can go look at them. They can buy the ETF OGIG if they want to own all the stocks. They can select some of the stocks after doing a bit of homework if they prefer to do that.
There we go. And guys, here it is. I'm on the page. I'll drop the link in the chat. But look at it. I'm on the page. It has the holdings, and yeah, check it out. 72 of them. I can tab through it.
When you're looking at revenue growth, are you looking at like month over month, quarter, annual? How do you guys look at that?
Yeah, there's a lot of data that goes into that. So there's the actual revenue growth for the trailing 4 quarters, and there's the forward revenue growth for the next 2 years. And so we used the blend of a revenue growth score, and we tested all kinds of methodologies to determine when it was simple and steady as the rev growth score that would identify the better performing stocks. If you look at history, rev growth is a great metric. Think of Amazon for a second here. You look back 10 plus years, it wasn't making any money. You had a whole bunch of people say, well, it's too expensive. Back about 10 years ago, it was trading at 44 times revenue. Now it's at around 5 times revenue. I mean, if people waited for Amazon to get cheap, they'd have missed everything. And so if you look at the stocks now, the 60 plus, 70 plus stocks in OGIG, they're all revenue growth driven stock selection. These are companies that are growing really fast. Here's a simple math thing I just did just before the call. I should have done it years ago. If you're growing your business at 40% a year revenue, like the OGIG portfolio in the aggregate weighted average, if you do that for 2 years, you've doubled your revenue. So if you're growing at 40% a year, you're doubling the revenue every 2 years. Now, that may not be exactly what happens for the OGIG portfolio year after year after year, but the actual rev growth last 12 months across the portfolio, weighted average, 40%. Think of it this way. Amazon, Google, and so on, they are in the portfolio. They weren't growing that fast. So there are other stocks that are, of course, growing even faster than 40 in order for the weighted average to be pulled up to 40.
Yeah. Go ahead, Jason.
Well, I was going to say, if you knew Amazon was going to grow 20% a year for the last 20 years, it would be automatic buy. I mean, high growth companies growing by that kind of growth adds up in a big way over time. What were you going to say, Luke?
Well, I was going to say something that we've talked about on this show many times is that there are a couple market factors that are proven to drive abnormal returns. What one is momentum, right? When the trend is more often than not your friend. Academically, that's been proven in a lot of studies. And then the other one is that holding on to your winners and cutting your losers typically fares better than the opposite. And I think that's sort of as Connor's talking about this ETF, it sort of speaks at the heart of that is, hey, you hang on to these ones that are showing revenue growth. You have a booking.com, it slows it down, cut the allocation.
Yeah, and that's a tiny piece, one of the smallest positions in the whole portfolio. Let's think of megatrends for a second. Everybody's lived through 12 months or whatever it has been of this COVID sort of shutdown and transformation. Some of the things that you see happening, really surprising when you look at the data. Business to business, forget the consumer for 1 second. Business to business spending on cloud computing and cloud related services is going from $150 billion to $350 billion. And a lot of that money is going to companies that are in OGIG. So it's not just about Amazon selling stuff to consumers or providing Amazon Web Services, AWS Cloud. It's across the whole ecosystem of business to business service providers and e-commerce. Of course, that's growing like crazy. Here's a funny stat for people. The e-commerce percentage of total retail sales in the US versus China. A year ago, China was well into the 20+%, and the US was barely over 10. So the e-commerce revenue growth potential in the US market is huge. Mm-hmm. And of course, it jumped ahead in the last 12 months, a lot. not ahead of China, but just ahead of where it was. And so the acceleration is really, really important. But it's not as if people are going to start doing, shopping old style now that they've learned how efficient it is to do almost everything they want to do online. So that's a really big driver. So you got this business to business driving cloud related. You've got the e-commerce driving the consumer spending. And then there's this third thing, which is called advertising. I don't know how much money you guys spend on advertising. You got a great fan base and they do the advertising for you. We love you. Your fans love you. Benzinga's got its own buzz in the market.
Shout out Zinger Nation hanging out with us today.
Exactly. But a lot of companies have to advertise. And that money is more and more getting spent on digital ad distribution channels. It's not just Google. The actual ad spend in the digital space now is much bigger than traditional. So no longer much ad growth on TV and radio and all that stuff. All the ad spend growth is going into the Facebook and Google and everything else like that. So there's another category that's a mega trend. Another one's entertainment. More and more people are getting entertainment through digital channels, not going to the movie cinemas and all that stuff. These are all captured in this OGIG portfolio.
And go ahead, Jason.
There must be a lot of our holdings in there that we spend money on. We buy stuff off Datadog, off Asana, Slack. I mean, so many of these services in the B2B space we're spending
Salesforce, DocuSign, Atlassian.
Exactly. Yes. So exactly. And Luke, what were you going to say?
Oh, I was just going to say I was going to throw another idea out there because, again, guys, this is the Stock Idea Show. Connor was talking about how the U.S. has to catch up with China in terms of percentage of the economy that's driven by e-commerce. Russia is even further behind the U.S. So if you want exposure to growing e-commerce market in Russia, check out ticker OZON. That's Ozon Holdings. Recent IPO. They're the number 2 player in Russian e-commerce right now. Basically, you got rising oil prices. You've got the whole world moving to more of an e-commerce structure. So it's an interesting stock. So little aside there that kind of prompted me to think about.
Yeah, and guys, we have Connor Bryan, O-Shares, Kevin O'Leary. You guys know him. I think I'm doing a RAS report with him next week. And so they have a bunch of different ETFs. And the way that I'm invested in one of them, and the way that I liked it was that Kevin's looking for companies that, have dividends. It's like what would your grandma want? They want companies that are growing and have dividends. So I like getting income versus just depending on, stocks going up. So that's how I originally got into the O-Shares stocks.
Yep. And check this out. Live portfolio that I share every day. Holding OUSA.
OUSA.
There we go.
Yeah,
I promised that you guys I would do an ETF segment at some point this week. We haven't done it yet, but you'll see OUSA pop up again when we do that one.
What about an ETF show like 3 days a week?
Let's do it. Give me a minute to tell people what's in OUSA. It's 100 stocks instead of 500, and they basically are selected because they have strong profitability using ROA as the measure, strong cash flow to debt, and then dividend coverage and dividend growth. And here's the thing about dividend growth. For people that want an income generating cornerstone of their portfolio, of their money, it's not a trading thing. You want to grow your income. If you actually buy something, an investment that has a 2% yield and growing at 10% a year, that income level is going to double roughly every 7 years. So it'll be yielding on your original cost. It'll be yielding 2%, then 4%, then 8% on your original cost. So it's a great way to grow income while just letting it sit in your portfolio. Do the trading that you want with the trading capital, but have some cornerstone that is that stability in the portfolio.
Yep. Yeah. I don't have the dividend yield on this screen here, but yeah, that's a big part of the reason why I got into this one in the first place.
That's nice. O'Leary tells people exactly what he has in his family trust equity allocation, and it's 40% OUSA. He likes the stability of the portfolio performance.
Yep.
Got it. Okay. All right. Any other things on the ETF front we should look out for? I know this GameStop stuff is crazy right now. People keep writing in about that, but I see another person owns OUSA here. ETFs are great. Yeah, ETFs give you peace of mind. So there you
go. OUSA holders.
There's the soundboard. I was waiting for that soundboard, Luke, when you showed your thing. So yeah. So
you got the sound effects just like that guy whose name I'll let you mention that has been on for about 20 decades.
Jimmy Chill. Yep.
He wasn't on yesterday. Did you see that, Jason?
No, my old boss.
There was no bad money yesterday. I don't know why. They had like an impromptu Scott Wapner filled up that hour for some reason. I don't know. Yeah, sort of weird.
I don't know.
Here's one thing I want to throw out as an idea here for people. If they're going to look at the OGIG portfolio and want to pick stocks, one thing they could pay attention to is the stocks that are getting positive revenue revisions. You know, our research shows us that revenue growth is really important. So look at the companies whose revenue growth is accelerating. You'll find a lot of them in OGIG, but I would think that's something that they could look at if they really want to be picking stocks.
All right.
Yeah.
I like it.
Okay. All right. Well, will you come on more often and we can give us some updates and changes in the funds, or if you launch new funds? I feel like you guys do that too as well.
We do.
Yeah.
That's fantastic.
So we got like 6,000 people here. This is the YouTube. We show 900, but there's like, we have different distributions. Maybe there's more. It's probably like 10,000. So they're here.
That's
they're tuning in.
Well, we'll do one another day with me on it. We'll get Kevin on someday.
Yep. Sounds good. Thank you for coming on, Connor. Appreciate it. Again, it's Connor O'Brien, the CEO of O-Shares. We don't bring you just some random person. We bring you the top at all times on the Benzinga Power Hour. Thank you, Connor, for coming on today.
Thanks, Jason, Luke. Thank you.
All right. Take care.
Good day.
Yep. All right.
We've got some breaking news to cover. Yes, I was about to say, play your most hype video that we have. We need it right now. Pulling up the chart of GameStop. Brent Slava, Benzinga News Desk here. Break us down what's going on.
All right, so how many halts have we had in GameStop so far today?
3, I think.
1, 2, 3, 4,
4
5.
now?
5 GameStop halts. So there is no catalyst that we're seeing on this right now. There are people on social media that are talking about an offering. We have no confirmation of this right now. It seems like some crazy speculation. I just wanted to alert people that that is out there in the social sphere. I think the main thing that I want to jump on and talk about today was just what's happening with these halts, right? I don't know if I don't know if a lot of people know why the stock keeps getting halted and stuff like that.
And how long? Because I know these circuit breakers start at 5 minutes and then get longer. So where are we at?
Exactly. So as far as I've been able to detect so far, they've only been the 5-minute circuit breakers. If somebody, so whoever's controlling the Benzinga Pro there, go to a newsfeed.
Okay,
and
rolling it down.
Sweet. And
look at
so,
that. While you're talking, it looks like we just got another one. Yeah.
So even go. Can you just go to Just BZ Signals? Yeah, hit the Just BZ Signals tab there. This will be easier to look at. So what I want you guys to look at here is just the timestamps. So trading was halted at 12:22. It resumes at 12:27. So about 5 minutes and 6 seconds on that one, right? So important to note here. This is an NYSE stock, right? NYSE does not quite have as strict of guidelines as the NASDAQ has. When the NASDAQ has a stock halted, it's going to be halted for 5 minutes exactly, like 5 minutes and 0 seconds. For an NYSE stock, they're expected to be 5 minutes, and then it might be like in that first example about 5 minutes and 6 seconds or so. When it goes to a 10-minute circuit breaker, we don't know. It just kind of happens. It's what's happening. Same thing that's happening with the Roblox IPO today is the specialists, the market makers are working to make a fattened price that this thing can open at. And so, especially for an NYSE stock, what's happening while the stocks are halted? The halts were put in place back in the Great Recession when there was crazy volatility, and basically it's supposed to give the market a chance to just cool off, take a breath for a second, and the specialists, when the stocks are halted, are working to make the market in this. And so that's why you kind of can have a little bit of a few second leeway on some of these resumes. It just means that the market isn't, the market makers haven't fattened up that price at a certain level yet. If it goes to a 10-minute halt, you can just assume that maybe the specialists are having a tougher time working out a fair market for this. It doesn't really mean anything. What I do personally is I assume it's going to be a 5-minute circuit breaker. I do the math. You can do the math on Benzinga Pro. Look, Luke, the last halt was at 12:46 and 49 seconds. So we can just do the 5-minute math and we can say, okay, let's expect GameStop shares to resume trade in about 30 seconds here. If it doesn't open within, let's say, 40 seconds, then let's just go and we're just going to assume it's going to be a 10-minute circuit breaker halt and you got another 5 minutes where you can't trade this thing.
Okay, so we don't know ahead of time how long these circuit breakers are going to be. I thought there was some sort of a rule where it's, the first 3 or 5 minutes and then it keeps getting longer and longer. But that's not the case.
So I believe I there's something there, Luke, but I believe how it works is chat, help us out here, correct us. It is related to how close it is to the end of, and GameStop.
There we go. We just reopened 5 minutes on the dot.
Yep, 5 minutes on the dot. Okay. It is, I believe it's related to how close we are to the end of trading for a day, Luke. So like if it's 15 minutes before and there's a circuit breaker, then like the times are adjusted basically. If it's midday, like we're right now, again, what I do is I assume it's going to be 5 minutes. And then if it doesn't open in like 6 minutes, assume it's going to be a 10-minute circuit breaker.
All right. And Brent, while we have you here, Roblox, I threw out my guess as to when the stock is going to open for trading at 1 o'clock Eastern, somewhere around there. Sure. I don't know if you have more insight than I do.
I can give a tip for future reference for this one too, but for other high-profile IPOs. So what's actually happened, I just kind of went over it when I was talking about how the specialists, how the market makers are like fattening up the market. What is happening is for an IPO, obviously the Roblox is a direct listing. We're not getting the same level of information as we would with a normal IPO. When we are getting an IPO, a couple of the items that you'll see before, especially on Benzinga Pro, the items that you'll see before this thing goes public, a stock goes public, is you'll see the price indication, which we do have on Roblox shares. And then you'll see after the price indication, you'll see a number of shares that are paired, it's called. And so what that pairing means is the specialists that are making the market in the stock, they are trying to pair buyers of the stock out there at a certain price level. And so a rule of thumb that I use for IPOs is that if the number of shares paired that you're seeing with a price indication is getting toward like 3 million shares, 2.5 million, 3 million, maybe up to 4 million shares for a larger size IPO, that means that we're getting closer. GameStop, another halt here on a circuit breaker.
Circuit break. All right, hold on. We'll
halted
pull it up.
Upside. So
Circuit
we're
breaker
halted
on the way
at
up.
262.46 right now, back over 250. So
right,
what is that?
So wait, hold on, Brian.
About an 80-point rebound here from the lows.
Yeah, and the time on this one, 12:53:54
we
Eastern.
can test this one. So let's just say right now we're expecting this to resume at 12:58:54 seconds p.m. Eastern time.
All right. So there's the deal, guys. About 12:59.
So let me jump back there to the quick description, Luke. So rule of thumb for IPOs is that if you're getting over like 3 to 4 million shares paired, we should be opening pretty soon. For something like Roblox that is being direct listed and we don't have that same depth of information, what I've been looking for today is we just want to see that narrow between the price range. We just want to see the gap between the price range narrow, right? When we first started getting IPO indications for Roblox, it was like a $5 spread. We're hearing Roblox shares indicated between $60 and $65. That was the first indication we got. Very large spread there. The last indication that we got was 64 to 66. That's only $2 there. We probably want this price indication to get down to like less than $1, probably like 50 cents. If this price indication is getting down toward like 50 cents, it should be opening what some of the specialists will say soon, quote soon.
And let me ask you this, Brian. What's the latest IPO that you've seen open for trading? Latest in the day. The latest that I remember is probably about 2:30 Eastern.
Yeah.
Are you around there too?
Yeah. I think I remember. Yeah, I don't think after 3. So like if an IPO is going to open after 3, I would think they would just like cancel it for the day and say we're gonna work on it tomorrow.
All right, I'm leaving my guess out there. I'll let it sit. 1 o'clock.
I would say just to get back to your question, Luke. I mean, we're sitting at 1 p.m. Eastern time here. I mean, it's gonna have to be. I would imagine it's gonna have to be in like the next 30 to 45 minutes. if you guys didn't see this piece of information that we had on Benzinga Pro earlier, I don't know if you guys already talked about it, Luke, but we did speak with somebody at NYSE early this morning, right after the market opened, and they said, wouldn't be surprised. I would be surprised if this thing opened before 11 a.m. Obviously, that's been 2 hours ago now. So I don't know. Some investors will use this kind of stuff as an indication of interest, meaning like, there's a lot of orders happening. Maybe there's more interest in an issue if it's taking a while to open. I don't necessarily believe that maybe, but I just wanted to put it out there. That is something that, people will say.
Yep. Yeah. And I'll pick up on what you're saying, Brent. We were talking about earlier on the show how, we see that the direct listing was priced at $45 a share here in Benzinga Pro. Then we saw, looks like it's going to open at 60, 65, 67, 68. That seems really positive, right? The price just keeps pushing higher. We've now seen two drops. So 68 expected open, now 65, now 64. That's still about 50% higher.
Have we done a contest? Is what's going to close at today?
Ooh, good call, Raz.
Oh, a closed contest? Let's do it.
Have you done it on the Twitter, on the Benzinga Twitter too? I mean, you got 160,000 people on the Benzinga Twitter.
All right, hold on. Well, we should do it for Zinger. Let's do a Zinger Nation version too.
Oh,
Raz, are you a fan of Brad Gerstner, Altimeter? Do you know him?
Why do I know him?
I bet you know him. That's why I was asking. Altimeter. Oh my gosh, can't say that. That's the fund that he works at. He's been interviewing on CNBC for a little while now, and I was typing out a couple of the headlines. I was covering the interview, and I typed a couple of the headlines into Pro, and he's an investor in Roblox right now, and he said that Altimeter is going to be invested in Roblox for the next 5 to 10 years. Like he made it sound like no questions asked. We're going to be in this thing for 5 to 10 years from now.
Yeah, I don't know him. I just went to.
Right.
I just followed on Twitter.
Link in the chat.
You should
go.
You should turn on notifications for his Twitter.
Put it in there.
Altimeter is thrilled to help bring Roblox public. Our passion. Yeah. There's an article in the Wall Street Journal. Inside Roblox stock debut from direct listing decision to its financial outlook. It's a good article in the Wall Street Journal, but this guy's listed.
Seems like a pretty smart guy.
Yeah, I like to turn on notifications for those guys so that you can get alerted in real time when he has something in stock market.
GameStop should be resuming here pretty soon, right, Luke? What time did we say?
We said 59-ish. What time is it? 1 minute.
Right now, resumes trade. Boom, there it was. It was right. It looks like it was exactly on the 5 minutes.
All right, Luke. I think
we're pulling it up.
Is that a breaking news item or no?
Say it again, Jason.
Was that a breaking news item that it's resumed?
Yep, just out.
GameStop is
breaking news.
It's back to live. We're down 1.4% at 243. We have a special guest we're bringing on to talk further about it, Rod Elsman. So before we do that, let's give him the special treatment that he deserves. Here we go. All right, Luke, good dance. There is Rod Elsman. How are you, my man?
Hey, Luke. Hey, Jason. Doing pretty well. How are you guys doing?
Good. Long time no talk. We miss you, man. We miss you. How you been? How's life? How's life in the fast lane these days?
Life's been pretty crazy. I'm not going to lie.
I'm sure. You probably have like a butler now and stuff like that.
Man, I wish.
Let me ask you this. Did you think there was a chance that you were going to be asked to testify at Congress? I thought your name might get thrown into there.
Who knows? I mean, it's kind of crazy they even had Keith down to testify. There's no reason in my book why he would be involved in the matter. I get maybe the media fervor about the Wall Street Bets angle and them finding him as the easiest person to single out. So I get it, but it's funny. I think in hindsight, when I watched that live, like he did the best job of anybody on the panel of just being, a human being who conveyed his message in a manner that was clear and easy to understand, as opposed to, thank you for that question over and over and over.
All right, let me ask you one more question, and then we'll move on to where we are today. But was your favorite part of the whole congressional hearing "I am not a cat"? Because that was absolutely mine.
My favorite part was I like the stock.
Okay, there we go. That was a good one too.
Yeah, that was good. I thought, Luke, they may have called us in because we were the room where they were all discussing this thing. So glad no one bothered us on that one. So what do you think about this latest GameStop stuff?
Whew. I mean, today in particular, and I've been following. I had the feed on in the background. I think is it up to 5 halts now? So I mean, today's obviously
6.
especially.
We just hit 6. Yep.
Jesus. Yeah, the last month and a half or so has been pretty nuts. I mean, there have been movements by the company, and we keep kind of tracking everything on our gmedd.com site. So we've been kind of following as they came out with the earnings announcement date just yesterday. But prior to that, the day prior, they'd come out with this transformation committee that Cohen, Atal, and Wolf are going to be on. They had announced the hiring of the chief technology officer and the 2 other senior leadership members. So they've made movements in the direction that we talked about in January. So the tuification keeps happening. Clearly, the prices front ran it to a large extent. So yeah, it's pretty incredible what's been happening.
I made progress on Ryan Cohen. So someone I know well, their kids go to school together. Ryan's
okay.
And their kid. I was in Florida, in Miami, and that's where Ryan lives. It was right across the lake, I guess, where I don't know what you call it. It wasn't a lake. It was like
it wasn't the ocean. Let's just clarify. It wasn't the ocean.
It wasn't across the ocean. It was like one of those things, those inlets or whatever.
The intracoastal waterway.
Yeah, something like that.
Rod's a lot smarter than we are, Jason.
Yeah.
I also lived in Miami for a few years, so.
Oh, you're also smarter. Okay.
I was there for a couple of weeks. That was my extent. So yeah, I mean, the stock did run on that announcement, went to 300, 320, and then some other stocks followed suit. I mean, do you trade some of these other stocks?
No, look, I think I told you guys I'm not really too much of a trader so much, but yeah, I was following that too. Some of the other meme stocks, what is it? KOSS is one of them. I saw that the movements are very closely tied to one another. So I guess I think that there are big hedge funds involved in this that are playing games too. I mean, it's pretty obvious that retail doesn't have the coordination or the firepower to have caused all of this on their own, especially with what happened in January. Obviously, this recent stuff threw me for a loop. I mean, if you want to talk about Roaring Kitty posted after he was at Congress, he said, I like the stock. And then he bought 50,000 shares at, you could back into the average. It was in the high 38s and change. So he pretty much caught the bottom. I have no idea what his current position is or if he's trimmed at all. But a lot of these folks are, saying crazy price targets. So some of them don't plan on selling. And then it just becomes, who else is selling? Is there any incremental selling pressure from new shorts that want to enter? I mean, I think a lot of them are probably still a little spooked after what happened last time around. But what I've been doing, I can't really justify buying. We laid out the bull case in the high 100s, but I can't really justify buying at these levels if until I have more information. Like I mentioned, there have been the movements in the right direction with the incremental hirings, the shifts in the new committee for capital allocation. So these are all good things, but I mean, the price at 250-ish represents a forward price to sales of around 3, which isn't on its face crazy.
Yeah,
but
it seems in line. That's actually below S&P average.
Yeah, I mean, it's just what's your risk reward, right? What's the upside from here and what's the downside from here? And I do think it's difficult to consider entering at these levels. But what I've been doing for the last month and a half, I just continued to write cash secured puts. And unfortunately, I didn't get any assignment. I had some $40 strikes that almost got assigned that week that Roaring Kitty bought under 40, but it closed at $40.60. So unfortunately, I have no shares right now. But I have, incredibly generated more premium in the last month and a half, 2 months, realized more premium, 2 or 3 times my initial GameStop investment. So it's kind of absurd. And the IV is insane again today. I've been writing more puts today.
So what month will you write those for?
I have been writing a lot of short dated puts to kind of play this I got written a lot of 319 and 326 to play around this, but today I was writing some more with the IV pump. Like I just wrote some January 22 $50 strikes. I wrote some July 40.
What are you collecting for that?
So let me go to my order status because I have.
You're writing them way out. That's interesting.
So I wrote, $20, $40 strikes for April 16th at just under $3. I wrote 10 at 50 for January 22 at $17. So like a lot of these break evens are still in like the high 30s, 40s area. I feel very comfortable acquiring in that area, but
so let me just slow it down for a second, Rod. So basically what Rod's doing is he's getting what I like to call synthetically long the stock, but by selling puts. And he's doing the $40 strike in April, and then the 50 strikes, it sounds like, all the way out into 2022.
Yeah. So right, like I am at risk. It's like I have I don't want to call it locked in because there is always you can always close out of the position, but right now with the implied volatility at such high levels, like looking out that far, you're close to like 300%. It's higher than 300% on the really close in stuff. So even though these are way out of the money, the value of the options is pretty high. So like me writing it means I'm on hook to buy at that strike, but it's really that strike less the premium. So that would be my break even. And I see it as, if you don't want to, chase this price and you maybe feel more confident in a entry point, I think cash secured puts when implied volatility is through the roof is a really smart play.
Awesome. I like it.
Look, it is another play. Like there's a couple stocks that I have limit orders on that are like 15% below where they're trading at right now. Instead of doing that, I could sell puts to end up owning the shares. Is another way to think about it, right?
Exactly.
With the market through the first 2 months of the year when the market was just straight up, I was checking through my portfolio. I made more money selling puts than any of the stock that I owned, which is sort of nuts.
Yeah, I mean, to the point Jason just made, I think that's probably the best example. Like if there's a stock you are highly interested in, you want to buy it at a certain price level, and instead of you just sitting there waiting with your cash in hand, not doing anything with that limit order open, you can write the put, which means you're on the hook to buy if it closes below that strike price. But if it closes above it, at least you generated some income off of waiting to find a nice entry. So
yeah, I think
it's a simple strategy that it doesn't it has the same risk profile as going long the stock. It's not as though you're taking on any crazy risk when you're writing cash secured puts.
Yeah, I really haven't done that way, and I'm gonna do some of that with some of these ones that I have limit orders on.
Yeah. And so Rod, I've got two things that I want to touch on. So one is you said, it's pretty clear that hedge funds are somehow involved or big money is somehow involved in there. I'm curious, like what gives you that indication? What do you see? How can we see it, etc.?
I just don't know how you could claim that all of this volume, it's just the dollar figure to me jumps out as being too high to just be retail. I mean, I could be wrong. It's certainly speculating, so I don't have any good way to quantify that for you.
Okay, no, that's fine. And then the other item I wanted to talk about, let me throw my screen back up on here. All right, so we got this press release earlier. Let's see, it's March 8th. So yeah, earlier this week. Basically about the committee, talking about the chief technology officer, the e-commerce lead, et cetera. I'd love to get your thoughts on what this means. How are you interpreting this, et cetera?
Yeah, it's a little interesting the way they went about it, because they announced that they had already formed this committee and that the committee had already taken these steps, which was just interesting. It wasn't like they announced the committee and then did work. They had already done the work, which we saw. What was it? It was earlier in the month, or it was in February. I'm losing track of time. I think what it tells me is that the grip on power has certainly shifted in the direction of the Chewy team in the direction of the largest shareholder, Ryan Cohen. That's my interpretation. With the CFO leaving in pursuit of a more e-commerce transformation kind of capable executive, clearly, having a CFO who had been this, and I'm not knocking Bell. I mean, there were some issues, I think, with some of the things he did tactically over the 2 years, a little less than 2 years he was CFO. But he wasn't necessarily the one best suited as, former PF Chang's CFO, a retail-centric CFO. Clearly, the direction that they're signaling with the hiring of a chief technology officer and these other announcements is that they're really accelerating the shift away from this legacy business, which, to the point I made earlier, like if you're going to get a 3x price to sales, you need a different model than just a transactional retailer like a Best Buy or whatever. So clearly there's some things that we should expect to see in line with them leveraging their customer relationships better. Like they've got the 20+ million active PowerUp Rewards users within the last year. So are there different sorts of subscription models where they can leverage their procurement power through the publishers, the OEs, to maybe offer GameStop exclusive digital content? Obviously, there are GameStop exclusive like physical content when they release new games and new products physically. But I think leveraging subscriptions is something that we should expect to see coming from them, because that'll justify a higher multiple.
Okay. Yeah, absolutely agreed. And then I imagine that some of those themes are what you're going to be looking forward to in that earnings release that's coming out. And especially the thing that I'm going to be most interested in, that the whole world is going to be tuned into, is that conference call.
Yeah, the last one was really disappointing, and so much has happened since that third quarter conference call. The price, reacted poorly after the call, and I think we've heard a lot of conversation from Kramer and others talking about how they should have issued shares already. And then there was reporting by Reuters about why they didn't in late January, because the quarter had just ended and they would have had to pre-release earnings and the timing was kind of an issue. But clearly the fact that they haven't opted to do any sort of a pre-release here, even with the recent price action, I think if you read between the lines,
and we did just halt again really quick, heads up for everybody. But yeah, I know. Was that 6 or 7? I think we've halted twice since only once since you've been on. Okay. But all right, keep going.
But yeah, I forget if we talked about it when I was on in January, but they had done in the third quarter this shelf offering, $100 million at the money or at the market, and they didn't tap any of that. And I know that there was speculated that there was disagreement within the board because of people not signing that document. There were a few board members who didn't sign off on it. Obviously, since then, we then got the settlement with the new board members added. 4 board members will leave come the annual meeting. So like right now it's sitting at 13, it's going to go down to 9, and it's going to be 3 of those 9 are Chewy people, and 2 of them are Hestia Permit, appointees from the prior fight. So do you think that the 2 appointees, who I believe both of them did not sign the shelf, I would think they're probably more in line with shareholders, more in line with the Chewy vision. So it may be that the writing is on the wall that maybe Chewy has an explicit majority at this point. Again, there's some speculation there. I don't know the ins and outs of the GameStop board. I definitely await what they're going to say in the fourth quarter, because the third quarter was so lackluster that's what led me and my kind of cohort to write the letter to Chewy, to Ryan. We wrote the letter to him on behalf of 4% of shares outstanding, saying that we encourage the direction that you laid out in this November letter. We want to see the company move in this more digital oriented direction. And lo and behold, then we got that settlement in January, and it was off to the races within days.
Yeah, no kidding. I mean, it's been a wild ride, and you just mentioned, all this craziness that's happened with the stock has happened between the last 2 conference calls. I mean, it's sort of nuts, right? Doesn't it seem like this has been going on forever? But
yes,
check this
out. It's taken years off my life.
Yeah, I can imagine. I mean, I'm like tired from covering it every day for 2 months. All right, but our last report was 12/8,
Yes.
And the stock went crazy on, when was that? It was late January, early January is when it got going.
Pull the 3-month chart, and if you put log on, it should be a little easier,
here's 3 months right here.
Yeah, but put on the log function because
I can't.
Okay, but if you look back in December, 8th was the earnings call, right? So I recorded a podcast, as a matter of fact, on December 14th when the price closed at $12.72, and just kind of laying out the story to help people understand. And I've gotten a lot of good feedback for folks who aren't familiar with GameStop. That I encourage you to check out that pod, because I tried to chronicle the events from like 2013, 14, when they tried to have this failed expansion away from their core video game business, and they acquired a lot of like AT&T retail, cell phone retailers. So I laid out how they kind of realized that was a mistake. They had this big strategic review that led to the hiring of Sherman in 2019, yada, 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 COVID, Cohen, et cetera, kind of bringing us up to speed with some of that history. I encourage folks to check that out. But the price really, if you go to January, you see the 13th, I think you see that big jump, which I mean, not big on your graphic, but it's big in reality.
Here,
because
look at that. Now it's
on
big.
January, that Monday morning, January 11th, we had the announcement pre-market that the settlement happened. And that was where the three former Chewy folks, Cohen and co, were added to the board. We didn't know if there was going to be like a proxy fight like there was the prior year with Hestia Permit. So when that got cleared up, it took 2 days, but you saw the huge spike on the 13th, on that Wednesday.
And I bet
my
you were
understanding
freaking out when
from
that
talking
happened.
to a variety of folks is that Sophos Capital had been one of the larger shorts. They had like an 8 million share cover that day, which kind of was the first domino to fall and kind of set things in motion. And we all know how much money Melvin and co lost amid the squeeze. So the weird thing to me, though, is that there isn't as much short interest anymore. Like there wasn't, 100% short interest in March to fuel this most recent jump, where we went from 40-ish to 90 in one afternoon, and then continued running. The next day it went up to like 185 or so, and then it kind of built out a little cup, maybe cup and handle, who knows. I'm not a technical guy that much, but yeah, this recent price action is really hard to wrap my head around. I think I've felt the FOMO, so I'm sure if I'm feeling FOMO, others are feeling FOMO, and a lot of retail folks who may not even know all like the fundamentals or care about the fundamental stuff probably have been jumping in trying to chase the rocket ship to the moon. But look, I could see a justification for a fair market value up here or higher, dependent on the path laid out. So you have to think that market participants are either placing a huge probability of success on a reinvented GameStop that's more digital first. They've changed the About Us page on the company's website within the last couple of days. So like clearly there's stuff going on behind the scenes in addition to those personnel changes that I was noting, that I think you have to argue there's euphoria going on, but that said, I could see a fundamental justification for it if they are able to execute this kind of strategic transformation. The question is,
like you said, it's only trading at 3 times sale.
Are you going to say that they can execute the transformation? And if you give it 100%, then maybe you think it should be worth $400+ dollars, but you should discount that. And I can't see and justify, like with this margin of safety, I find it hard to enter up here. I'm going to keep writing my CSPs. I did write some yesterday at the 100 and 125 strikes for the 19th, I think it is. So if my appetite for entering at higher levels has been rising, but again, there's no guarantees in the market, and clearly this could very easily retrace back. I don't believe we're going to see the 40s again, personally, at this point.
And let me ask you one more question, Rod, and then I'll let you run. But for that earnings call that we have, and that's on the 23rd, correct? So it's less than 2 weeks. We're coming up to it, all right. But less than 2 weeks away. What's if you had to name one thing that's most important for you to see or hear from that earnings call, what would it be?
Yeah, the most important thing I think for me and for other investors who folks entering right now are clearly expecting it is a clear laid out, articulated pathway to transform from where they are today to where we believe they should be going, with fewer stores, fewer physical stores, alternate means of generating revenue that's higher margin, that's going to justify a higher multiple, things like that. So clearly this digital transformation, we need to see it articulated in a believable manner, how they're going to get there and what it's going to look like in the future. Because otherwise big funds aren't going to be willing to throw money behind it. And I think you're going to see just a lot of this noise as retail keeps kind of churning the FOMO. And obviously we got stimmy dollars coming soon, so who knows what's going to happen.
Awesome. Well, Rod, thank you very much for joining us, especially on such a chaotic day today. We're just sitting here watching the thing get halted, and you're actually able to shine some light into the stock. That's how we like to do it for Zinger Nation out there. Try to cut through the noise, get the story going. Guys, the website is gmedd.com. I'm going to spam that link in the chat like I always spam links in the chat. You'll see it 5 or 6 times there. So there you go. Rod, thanks a ton for coming on with us. Good luck with your cash secured puts, and we will talk to you soon.
Thanks, guys.
All right, take care. All right, so there you have it, guys. We've had some wildness happen in the stock while Rod was talking. We got, I think, 2 more halts in the name. Prices seems like it's steadying out a little bit here. Let me throw it back up on the screen here. All right, GME, GameStop. All right, there it is. Here's the 1-month chart. Here's the daily chart. 1-minute candles. That means each little bar here represents 1 minute. Producer Rohan, can I get a charger, please? So here's the 1-minute chart on GameStop. Definitely settled out from these $100+ swings that we were having here. But there's the deal, guys. So, all right, Rodrigo A in the chat, my man, shouting out, like the video for Luke. There we go. That's me. I'm Luke. If you're just tuning in here, like the video, share the video, follow the Twitter. I'll drop that one in there too. If I ever have a chance to plug, I'll take it. Because we've been doing this for about 3 months now and having a lot of fun hanging out with you guys. Again, this is the Trade Idea Hour. That's what the Power Hour is all about. It's not just about hanging out, having fun and gimmicks, but it is absolutely about hanging out, having fun and gimmicks. We also want to get the ideas flowing. Again, I'll throw out some ideas that we covered earlier in the show if you're just tuning in with us. But we talked about Jonah Lupton's Celsius Holdings trade into earnings out tomorrow before the open, ticker CELH, Charlie Echo Lima Hotel. Basically, the thesis there is that the estimate is really conservative. They should blow it out of the water. Next idea that we threw out was the bank stocks. If you want to be a little bit safer in your portfolio, you want to hedge yourself a little bit, banks are interesting. So Bank of America, that's one that I've been in for maybe a month or so now. We bought calls on that. We're up about 200%. And then if you want a small bank play, a potential acquisition target, yes, a little bit riskier, but this one is trading at 57% of its tangible book value. Or I'm sorry, not 57, 85% of its tangible book value. I don't know where the 57 came from, but 85%, that one's ticker MSVB, Mike, Sandy, Victor, Bravo. We talked about OGIG, Oscar Golf India Golf, OGIG. That's an O shares, Kevin O'Leary, Mr. Wonderful, ETF. And then, of course, we had Rod Alsman on, the GOAT of GameStop, the guy behind the face behind the face in front of. I still don't know the right terminology. Somebody in the chat tell me. But the man with the plan running GMEDD.com telling us, hey, where is he at with the stock? What does he think of the valuation? What does he think of this trading activity? The institutions involved in it? And, of course, what we want to see out of this upcoming earnings report. So there's where we're at so far today. Next up on the docket, let's talk Roblox. Let's talk. I've got a covered call, a live options trade to make before we head out today. So I'm going to be selling a covered call, talking through why I'm doing that, what stock I'm doing that on. And then, of course, we're going to have CEO of Charge Enterprises, public company CEO, joining us live on the Power Hour, because that is how we do it, guys. And let's get a nice little voice here.
$1 million.
See, there we go. I need to use more of my sounds. I've got good sounds on here. Here's maybe my favorite.
Congratulations.
Congratulations. So, all right, let's go over to Roblox. Ticker RBLX. Still no open. All right. So we're still waiting on Roblox to open, guys. My guess at the top of the show was that somewhere around 1 o'clock is where this thing would open. Right now, we're looking at $64 to $65. That range is tightening. So I would expect any minute here. We want to see Roblox open for trade. The latest that I've seen an IPO start trading is 2:30 Eastern. We're nearing that band right now, so I would expect within these next several minutes, we'll get the open here out of Roblox. Again, $64 to $65 is the best guess that we have right now as to where that stock will start trading. Check out pro.benzinga.com. And then, of course, we threw out to Zinger Nation, all of you out there in the chat, what price is Roblox going to close at today? And somebody did the math work down here for me. Shout out whoever did that. Give yourself a round of applause there. So, all right, I'll drop the link in the chat one more time. If you want to participate, here it is. We're going to close it from the public in just a couple minutes here. Guess the price that Roblox is going to close for trading today. Winners getting whatever they want from swag.benzinga.com or a Benzinga Pro, whatever you want. But here's where the group is at. The highest price somebody guessed was $212. The lowest price somebody guessed was $32. Mean $85, and then the mean average $77. So that's where we're at with it, guys. There's the Roblox guesses. We're going to be watching that one closely through the end of the show. Again, I would expect that we're going to get an open before the show closes. And guys, if you're running out of room here to enter your guess, just hop down. Do it. Hop down. Don't worry. We won't miss it. We'll go through them all. Don't overwrite the means and the medians, please. Somebody did that nice work for us. Just hop down here. Throw your guesses in. Again, I'm going to leave this open for another minute or so, and then we're going to close it off. And we're going to be throwing out some prizes. Checking in on this one tomorrow. And of course, we do have our chat challenge. Maybe we should get to that right now. Chat challenge. All right, and I've got a video. Let's cue up the video. I know. Let's see. God, I've got bad eyes. Sorry. Zinger Nation is going head to head every single week. What is the best performing stock of the week going to be? All right, guys, there it is. Chat challenge. We ask you guys every single week. We're trying to figure out who's the best stock picker. Let's get the ideas flowing. Again, Power Hour is the trade idea session. That's what we're going for here. Not just ideas for myself, not just from Jason, not just from our guests that we bring on, but also from all of you out there in the community. That's what we're going for, guys. So question of the week, what is the best performing stock of the week going to be? We had a lot of you. Several people guessed GameStop, ticker GME. Of course, we talked about it today. GameStop, despite the sell-off that we've had, still up 43% since the week started. So all of you who guessed GameStop, round of applause. Let's go. All right, there's the round of applause. We'll get one more.
It's over 9,000!
Yeah, there it is. All right, so everybody who guessed GameStop, you are leading the week thus far. You're all going to get prizes. We didn't decide exactly what the prize is going to be yet. Maybe it'll be a share of GameStop. I don't know. We'll figure that out. That's what we do on this show. We figure things out. So there is the update on our chat challenge. If you did not get to participate this week, you didn't get to throw out your guess as to what the best performing stock is going to be, don't worry. We do it every Monday. Come back next Monday, hit subscribe, like the video, share the video, and next week we'll do another chat challenge where, again, you can sort of strut your stuff to the group and say, hey, here's what I think the best performing stock of the week is going to be. All right, let's take a second and let's get into this covered call trade that we've been talking about. Here's the live portfolio, my live interactive brokers account that we look at every single day. Let's make it, there we go. All right, we'll make it bigger. So, all right, covered call we're going to sell. So look at this ticker, HIMS. This is a stock I'm long-term bullish on. Recent SPAC IPO, ticker HIMS. If you don't know this one, go to forhims.com, check it out. Basically, I view this as a sexy telemedicine brand. That's why I like this one. We see a lot of these telehealth brands. I think that there's going to be a long-term shift into telemedicine, like I think a lot of people do. And the reason why I like HIMS in particular is that I think it's a sexy brand. I listened to a recent CEO or interview with the CEO, basically talking about some profitability concerns that people has. And his thing is, we could turn profitable right now if we wanted to. We could be cash flow positive. But we have so many more market segments to get into. There's no reason to. We need to go out and get market share. So again, I'm not going into the full pitch. I've done the full pitch twice now on HIMS. So I'm not going to do that. But instead, I'm going to talk about selling covered calls. at the top of the show, throughout the show, we've been talking about wanting to make the portfolio a little bit more conservative, right? We had some of these days where we open it up in the morning, we're down 10 grand, a little bit more risk than I have appetite for right now. And so if I can't handle that risk, right, I need to make some adjustments. And so what I'm going to do is I am going to sell some calls against my HIMS position. So check this out. The average price that we have here on HIMS, $21.58. I'm going to write that down now. Here, we'll do it in an Excel sheet so we can do the math. All right, we're talking about HIMS. HIMS average price here, $21.58. And yes, I will zoom this in. Don't worry. All right, so there we are. And then let's go to the option chain. So we're going to scroll up. We're going to search HIMS. Okay, maybe not. We make this demo really bad. Okay, maybe we're not going to be able to do this trade. Let's see. Let's try again. HIMS. All right, HIMS. All right, there we go. All right, we got it. That was a little bit scary. I might have thrown our segment off a little bit. So, all right, HIMS. Here's the option chain on HIMS. We're going to look a month out. I typically look a month out or so when I sell covered calls. And we're going to hop all the way up to this $22.50 strike, okay? We can see that the last trade on calls and HIMS was 35 cents here. And so I own 200 shares of the stock. So I'm going to go ahead and I'm going to sell 2 calls against it. Let's throw our limit price on here. It's not super liquid. There's our 35. There we go. Submit sell order. Boom. All right. So a couple things just happened when we did this. All right. So for one, when we sold these calls against HIMS, we collected 35 cents of premium times the number of shares that we sold calls against. 200 shares, right? 2 contracts. Each contract represents 100 shares. So there's 200 shares. So let's do the math here, right? 0.35 times 200. There you go. We just got $70 credited to the portfolio. Okay. And so here's what I like to think about this. Premium sold in it, right? We just sold it for 0.35. So adjusted price, that minus that. There we go. So the way that I like to think about this is we're lowering our cost average on the stock, right? So we bought shares for $21.58. Then we just sold calls against it for 35 cents per share, and that lowers our average price on the stock to $21.23. This is the 3rd time now I've sold calls against the stock. Yes, I still do have all of my shares. And so my cost basis on the stock really is lower than this, right? I don't have the exact price that I sold those calls the previous 2 times for, but if we estimate it, right, we say that it's around there. That would bring my average price down to $20.53. The risk that I'm taking on is that I may be forced to sell my shares for $22.50. So if the stock price runs up to 30, I don't get to participate in that price appreciation. My fund stops at $22.50. Again, I want to make my portfolio more conservative. That's why I like bringing down the cost basis. The only risk that I'm taking on is that I'll be able to sell the stock for $22.50. Right now, if we look at a last trade on HIMS, HIMS, we see it's at $13.75. So if I'm forced to sell the stock within a month from now for $9 higher than I paid for it, great. I'm okay with that, right? I'm hammered on the position right now. I've got no problem selling it for $22.50 within the next month. I can always buy more shares if I want to, if I want to get, more along the stock, etc. Again, effectively what I did was I lowered my cost basis. The risk I'm taking on is I'll have to sell the stock for, what is that, 70% higher than I trade now. I've done this 3 times now, slowly lowering my cost basis on the stock, basically getting paid to own it. So there it is. There is our trade, our covered call trade. That's why we're doing it. So guys, I know I went pretty quickly through that because we have a next very special guest lined up for us. But if it would be helpful to do another covered call lesson, let me know. Drop me the 1 in the chat. We can talk more about this. If not, drop the 2. And guys, we're about to cut to a very special guest. I see him waiting there for us. But Roblox did open for trade. We're sitting at $67 right now. First print was $64.50. All right, we'll come back to Roblox, but before we're out today. So all right, guys. Without further ado, producer Rohan, can we get our special guest video? Oh, I see him queuing it up. All right. There. All right. I like the song. Andrew, what's up, man? Welcome to the Power Hour.
What's up, man? I loved the lesson. Thank you.
Absolutely. How you doing?
How's life? I'm doing great, man.
Good, man. I mean, we're warming
up.
Where are you? Right? We're here in Detroit, Michigan. You see behind me the ice. The snow is gone.
Nice.
It's like 40 degrees. GameStop's was at $300. Life is good. What's up with you?
Life is good also. I love how enthused you are about the market. At the macro sense, the U.S. markets have melted up, and there are a lot of amazing companies out there that are doing spectacular things. The sector that we focus on, the electric vehicle infrastructure, which has a wide variety of space, is really the micro of the world. And we do the unglamorous work. And so it's fun because there's a lot of business out there. We became public last year at the kind of the middle of October. And so we're just growing and having fun and watching kind of as the market evolves.
Awesome, man. And I didn't really do a real intro, so let's do it now. But Andrew's CEO of Charge Enterprises, guys, ticker CRGE. I promised you a public company interview today, so I am delivering. I always deliver on my promises. But again, ticker CRGE, Charlie Romeo Golf Echo. But Andrew, can you tell us a little bit more about the business? What makes you guys interesting, etc.?
Yeah, I would love to. And so all this information is public, but we started in January of 2019, focused on doing the most unglamorous work in kind of the electrical revolution, which was the stuff that you weren't going to be able to outsource to China per se or any other country. This is localized work from maintenance, installation, and service that goes around the entire EV ecosystem. From micromobility devices all the way up to vehicles. And so domestically speaking, we need 13 million charging stations installed just in the United States. And so there's a ton of work that needs to be done to provision all that. Today, we have approximately 100,000 stations. And so we're just going to be very busy installing and building kind of the EV revolution so that as automotive makers tout their all electric fleets, that they're actually places to charge them. So it's a huge friction point today, and it's a point that we love focusing on. So
sorry, I cut myself off there.
Still?
Yep. Sorry. So it's sort of that infrastructure behind EV. Are there any specific regions that are most? Go ahead.
Yeah. So we operate in 19 countries. We're $500 million run rate in revenue. So we have a real business. From an operational perspective, I talked about this a second ago. I believe that we're in a bit of a nuclear winter with COVID, and the stock markets have melted up a little bit, but they could melt down as easy. And so we've focused on from an operational standpoint, having a profitable operation. And being focused on providing services that people don't want to provide. And I love this space because if you think about the future, there's all this displacement coming from AI and driverless technology, but there are all these amazing jobs that can be created around the space. And so it's the pickaxes and shovels of the Wild West that we focus on.
And can you take us through the revenue model and how exactly that works? Who pays you guys? What do they pay you? What do they pay you for, etc.?
Yeah, so today we have two divisions, a communication division and an infrastructure division. In the communication division, we make a small toll every time a phone call is made through our systems. We operate in 19 countries that way. in our infrastructure division in New York, Paris, Los Angeles, and where we tested in Atlanta. We have a series of micromobility and charging devices that people use, and we get paid a fee every time they're used to simplify it.
So is it sort of like I drive a gasoline vehicle? Is it sort of like where I go to the gas station and pay to fill up my car? That's what people do with EVs?
In the future, absolutely. In the future, absolutely. Today, we only have 100,000 charging stations domestically in the United States. We can't even scratch the demand because there aren't enough charging stations. But my thesis on this is in the future, yes, there are going to be millions and millions of charging ports, just like there are gasoline stations. And there are going to be people like us that own and operate them and build technology around to service them. And so the space that we play in is doing kind of all of that ancillary work. So we don't necessarily have to manufacture the charging station, but we want to provision the real estate. We want to maintain the systems and get all that ancillary revenue off of that, not just, selling a system.
So it's less of you guys are the ones who are owning and operating the charging station. You're more of like the business behind the business that does the maintenance, helps them find locations, I imagine, that work along those lines.
Exactly right. Okay.
And
now we'll own and operate. Yep. I just want to clarify. We'll own and operate our own systems as well. But to feed this revolution, we don't be, so arrogant that we're going to own every location. We want to bring this market forward. And so we announced something last week, which I encourage people to read. But this is about this transformation in our society to electric vehicles and who's actually doing the work of actually jumpstarting it. And so our thesis is this is the area that most people aren't focused on because it's not that glamorous. And so that's the area that we want to focus the most on because it's the hardest job to do.
Okay, and so it seems like the strategy is twofold then, right? You're helping the charging stations owned and operated by other businesses be able to operate, but then also owning them yourselves. Is that right?
That's exactly right.
Okay.
Exactly right.
And then let's talk about competitive landscape a little bit. How are you guys positioned? Who else is out there? Why do you think you have a best shot at this, et cetera?
I think there are going to be some unbelievable companies created around the ecosystem. I think that what's going to make us stand out is the way that we treat our employees and our stakeholders and our mission to do the right thing. But there are going to be some unbelievable companies out there. I expect we'll be the best one, but it's the first 15 minutes of the ball game. So right now, all I have to do is build best practices around how we treat people. It's on our website. I talk about something called peer. Treat everybody like a peer. Be prompt, be ethical, have empathy, and be reliable. When you work with us, that's how I'm going to be, and that's going to be the secret to our success. And because we're only 15 minutes into the evolution of EV, we need domestically 13 million stations out there. We're laser focused on providing value around that ecosystem, and so I think you'll see. Hopefully a lot of great companies created, and we're one of the best, but it's 15 minutes in.
Yep. And question out of the chat is a good one. It's basically asking, are you guys going to be commercial only? Will you also service retail, right? If people are building chargers into their homes, but where do you picture yourselves living in that?
Yeah, such a great question. Such a great question. It is my most exciting thing that today you buy an electric vehicle and the customer experience is an absolute disaster. It's absolute disaster. And so there's so much friction that's going to get fixed in that. I wish I could say more about it, but kudos to the question. Rest assured, we're thinking about it. And I think the future in that space, companies like us are going to pioneer removing that friction so that you have a charging station at your house. It's easy to use. It's not going to break down. You had white glove service along the ecosystem. And I encourage people to look at our recent releases around this because I'm really excited about this that conversation.
Okay. And let me ask you this one: biggest challenge that's in front of you guys. You mentioned you're at a $500 million a year run rate of revenue, which is significant. I think you also mentioned that you're profitable. So it seems like there's a lot of tailwinds. But what's the biggest challenge on the horizon? The biggest thing for you guys to get through?
So one, we have to increase our margins. Two, we have to find great people and train them. This is just the beginning. Like I keep referring to this. If this was a baseball game, we're in the top half of the first inning. We have 100,000 stations in America right now. We need 13 million. And so I don't consider us that smart. But I do think that the key to our success will be ultimately how we treat our people, how we treat the communities that we serve, and the type of jobs we're trying to create. And I think that anybody who invests in us understands that our ethos is that this is stakeholder value we're creating, that we're not in a race to the bottom. We want to create, the gold standard of this infrastructure space. Look at our board announcements that we have. I think you'll see that, our board is made up of an unbelievable group of people, each bringing kind of something unique to the table. And listen, we're barely, 2.5 years old, and we're only public, less than 6 months. So there's a lot of exciting stuff that we're doing. We went the opposite route. We didn't go the venture capital route. I have a lot to say about that, but I'm sure you don't have enough time. But any questions, keep firing away if you have any more.
Awesome. Let me take 2 more out of the chat, and then I'm going to ask my favorite question. Oh gosh, there's 3 more over the chat. All right. Let me take 3 more out of the chat, and you can answer them quickly. We don't want to take up your whole day here. But the first one is your team members, your employees. What fields of work do they come from? Number 2, where is R&D focused? And then number 3, can you go over where the balance sheet is at? And don't worry if I went too fast. I've got them written down. So if you want to go one by one and ask me.
I got them.
All right, cool.
Yeah, great. So from a balance sheet perspective, we're in a great place. That's all I can really say. From a staff perspective, we have a diverse staff of people, decades of experience in a couple of different domains. From a staffing perspective, I think the key to our success is our staff. And so I have a mindset of slow to hire, quick to fire, because it's a corrosive thing. People who've worked with us know that's my style. I've built a number of businesses, so I can pull my staff and relationships from other places. You'll see I just announced our CTO. Our CTO has been with me north of 10 years. And then from an R&D perspective, there's a tremendous amount of stuff coming down the pipe. I'm the guy who wants to install the first generation, without the first generation, reinstall the second generation, rip that out and reinstall the third, fourth, and fifth. And each time getting management fees along the way. So we don't have the same budget for R&D. My budget has to be for training the next generation of workers to get us to a $50 billion a year revenue company. And it's possible. It's right in front of us. And so we took the back door. We went the pink sheets and are kicking and scratching our way up. And fortunately, our R&D is spent having conversations like this and having people like yourself amplify what we're up to.
Awesome. And Andrew, a question that I always like to ask everybody who comes onto the show: if you had to name one thing you're most excited about, what would it be?
This is fun. This is awesome. Tomorrow is going to be a great day. I'm excited about everything I see. The EV space, we have to just be at the right place at the right time. So I'm just most excited about tomorrow. What are you most excited about?
All right. So I'll give you 2 answers. I'll do one EV specific answer, and then I'll do one Luke Jacobi answer. EV specific answer. Let's check this out. Background here, you maybe can see General Motors headquarters. I'm not sure how blurry my screen is, but I'm in Detroit, Michigan. I'm excited for Detroit to get behind this EV wave. I own a ton of Ford. I own a ton of GM stock. I own calls on Ford. So that's what I'm excited for on the EV space. On the Luke Jacobi side of things, I'm most excited for. All right, I'm finishing my first Russian literature that I've ever read. It's Anton Chekhov. I'm reading his full collection of short stories, every single one he's ever written, and it's really cool, but it's sort of been a slug to get through, so I'm excited to move on to the next book. So there's 2 for you.
Nice, my brother. Thank you. Well, thanks for having me on. I appreciate your time today, and we're a long-term hold and have a vision towards kind of creating great jobs and servicing our communities that we're working with, not just about grinding out and making as much profit as possible on every single thing. Some of it's long-term. So thanks for having me.
Cool. Awesome, Andrew. Thanks for joining us. Once again, guys, the stock ticker CRGE, Charlie Romeo Golf Echo. Andrew, have a good day. All right, guys, there it is. Hey, shout out GGG investors. Smash that like, share that stream. Really interesting stock, right? I said to you guys at the top of today, I say to you at the top of every single show that we do, this is the trade idea place. Hold on. There it is. There's the air horns. There it is. A stock that I'm sure a lot of you aren't super familiar with. But very, very interesting, especially as we do all this EV talk. We see what I like to call EV energy. That's my phrase for it. That's what I'm hoping flows into these Ford and GM stocks. Question to you guys. We're running out of time here. We got 8 minutes. We can cover one more stock. Do you want to do General Electric or Roblox? That's the question. General Electric or Roblox. I'll let you guys vote. Question out of the chat. Do you read in Russian or no? Nope. I read in English. Again, Anton Chekhov. Check it out. If you want an introduction to Russian literature, it's the first piece that I've read. It's awesome. It's a really good place to start. There's a lot worse out there. Wow. Okay. I threw out GE versus Roblox sort of as a joke, right? Because I figured everybody would say Roblox. But we sort of have a mixed bag here. But we're doing Roblox. We're not doing GE today. Well, since there is some GE interest, I'll write it down for tomorrow. I'm a GE bag holder. Shout out all my fellow bag holders. Let's go. Yeah, getting hammed on GE a little bit today. But all right, let's do Roblox. We are open for trade in Roblox just on time before the power hour ended. And let me get my chart up here. Bad eyes. There we go. Thank you, producer Rohan. Roblox open for trade. Again, the direct listing, we'll recap it. Priced at $45 per share. First trade, $64.50 a share. And we are a little bit higher. Last trade, $73.39. This chart is not beautiful in my opinion. What I would have wanted to see when this stock first opened up for trading was the chart to go absolutely bonkers, right? I would want to see this thing be rip-roaring, just like we saw on Facebook during the first day, like we saw on Snowflake during the first day, like we've seen on so many of these high-profile, highly followed IPOs. The stock is just sort of hanging out. So the fact that we went from 64, this first little run was nice. But then we stopped. So I don't love this one. I'm not going to trade this thing either way. The thing that I'm going to say, we talked about this earlier in the week. On average, academically studied, on average for IPOs, first day price appreciation. On average, the price of an IPO goes up after the first day of trading. On average, the price declines over the course of the first year. Okay, price goes up first day, declines first year. So keep that in your back pocket. Obviously, it's not a rule, but it's an average. Let's look at this chart. We have some amazing members out there in Zinger Nation. Look at this. So somebody made us a nice little average, median, max, min box, and they plotted all the price guesses. Let's go. If that was you, if you did this work, shoot us an email, powerhour@benzinga.com. We're going to hook you up with some merch from swag.benzinga.com. Caesar running swag.benzinga.com. So guys, last trade, $73. Highest guess that somebody had for the close of trading on Roblox today out of the community, $212. Lowest guess, $32. And then your average, $83. Your median, which is a better measure because it throws out some of those extreme outliers, your $212 and your $32, $79. So it seems like the crowd is actually calling this one pretty closely to where it is now. And let me zoom out for you once. Here's the distribution of guesses. Right here's where everybody threw in their price of Roblox. Again, whoever gets their price the closest, tune back in tomorrow. We're going to be calling out who the winner is on this stream. We're going to be giving away some sort of a prize. We don't know what the prize is yet, but again, we figured things out on this show. My opinion, I see Spencer Israel hanging out in the back there. My opinion is that I would want to see this a little bit higher. Or like a little bit more energy on this thing. I'm gonna drop the link to the guessing in there. It's view only now, so sorry if you missed it, you missed it. But I would have liked to see more continued momentum on this thing. That the fact that it seems like we're sort of stalled out at this $73 level. I'm gonna throw a refresh on this chart because we've been sitting at that exact price for a minute. Make sure our quotes didn't stop. All right, we want a 1 day here on Roblox. Yeah. So here are 1 minute candles, right? It looks like it's been about 15 minutes or so. Doesn't look great. Here, I'm going to add Spencer to the stream. We're going to get a scoop from Spencer. We're going to get a preview as to the next stocks that we're going to talk about. But Spencer Israel, I'm putting you on now. What's up, man?
What's up? I just hopped in because I'm going through my email right now. I'm looking for a chart. You were just talking about IPOs, how they typically trade below their IPO price. I had some research from Eric Kroll, who's the author of The Life Cycle Trade, which is basically all about the stages of IPOs and how they trade. And I'm looking for his chart right now because, to sum up Luke's point, there is a lot of research out there that says if you just wait on an IPO, just wait. Don't buy it the first day. Just wait. It is almost certain that you will get it for a lower price. That eventually, within the first 6 months, the stock will trade below that IPO price. And I'm looking for that chart right now because I can't find it. But this is true in the vast majority of cases, right? Whether it's a direct listing, whether it's a traditional IPO, too soon to tell on the SPAC front. But by and large, in spite of that first day IPO pop, you tend to get some kind of a sell-off in the first 6 months. So if you want to buy an IPO, you're better off more often than not just waiting. Just wait, sit on your idea, and wait for it to fall below that IPO price, and then you got a better deal than everybody buying on the first day. So,
all right, here's an interesting one. Somebody in the chat throwing out. I can't tell if they're joking or not. But they said Roblox is not ribbing because gamers are throwing their money into GME. That could be a thing.
If by gamers, does he mean like the retail trader?
Yeah, people who play video games. Okay, I don't know. All right, Spencer. But all right, I would imagine too that when we have some of this downward movement on the chart, it's maybe there's going to be some more exits too, and people who bought into this thing shortly after it opened, waiting for it to rip up to 100. It's not. So there's the deal there. And Spencer, what's the news with the stimmy checks? Did that get officially cleared? I know we were waiting on that.
Great question. I mean, at this point, if it's not official, it's all about official, right? I'm sure. I don't know if it's actually signed yet, but we're all getting checks, Luke. That's at this point, that's not up for debate. We're all getting checks.
Let's go. Let's run it up again. We need more fuel. This market is running out of fuel. We're running on things to drive it higher. We need a third round of stimulus, third round of payments, and we'll really be cooking. I don't think we're getting it. I think the jig is up. I don't know. What's your take?
I agree with you that we probably need more rocket fuel, more fuel. But I'm really at a loss for how late we are. Honestly, Luke, the GameStop thing today just sort of blew me away.
Why? GameStop is the market head.
Because I stepped away from my computer for like 10 minutes. I stepped away. It was at 270. And I came back and it was back at 270, but in the meantime it had fallen to 172. And I was like, holy shit. So
you have to admit that was the most perfectly timed sound effect of all freaking time.
That was really good. Congrats.
I mean, that was really I'm becoming a professional on the soundboard. If there's any nightclubs that you guys know of that are hiring people to do sound effects, let me know. I'm getting pretty damn good at this thing. But all right, Spencer, preview us the rest of the day. GameStop settling out here. Here's a 1 day chart, 1 minute candle. So each red and green line here we have represents 1 minute. We're hanging out right around the 260, 270. Oh, we're going right as I said that we're going. We're ripping above, I don't know, like a 15-minute high. So obviously GameStop, the stock to watch today here. Zoom you in. Here's some of that recent price action. But all right, what do we have coming up today, Mr. Spence?
All right, I'm just making sure my soundboard works because it was on, but it wasn't. It was on the right setting. Okay, so I'm actually about to hop off the stream. I want to hop into our next show, which is the ETF show. Supposed to be half hour, but I'm going to go for an hour today.
Woo!
And what I've got a really good guest, guys. At 2:40, I've got Jamie Wise. If you guys have ever heard of a man whose name is Dave Portnoy, you may have heard that he is part of a new ETF, the Buzz ETF.
So this is the guy behind the Portnoy Buzz ETF?
This is the guy behind the Portnoy Buzz ETF. This is the brains of the operation. No
Wait, hold on, Spencer.
Yeah.
Damn, son, where'd you find this?
Holy crap, that was amazing. That was an amazing.
I told you, nightclubs, hire me. I'm looking for a career change. All right. So you're having the guy who's behind the Portnoy Buzz ETF on.
Yeah. It'll be in about 40 minutes, and I interviewed him back in like 2016, and a lot's changed since then. So we're gonna ask him how this thing actually works, how his algorithms actually work. What's it like having Dave Portnoy, talk about your ETF every day. And in the meantime, I'm just going to kind of go through what's going on in ETF land, right? I've been talking about wanting to buy a new ETF, some sort of infrastructure play, and I'm going to walk you through, how I do some research for that. And then we'll just hang out. We'll take questions from chat. We'll hang out. So I'm going to hop off, and when Luke ends this stream, it'll redirect it to my stream, which is about to start. So,
all right. So XIII, he's the one who gives us all the sounds, sends them over to us. So big shout out there.
You are fake news.
Yep, we got tons of them. But all right, guys, previewing you tomorrow, and we're going to kick it over to Spencer's ETF show. I'm actually going to do my ETF portfolio. 70%, we look at the live portfolio every day. 70% of the assets in that portfolio are in ETFs. So we're going to be talking about basically how I construct that portfolio, what's in it, why I choose that. We talk about the 30% that are like the rippy fun stocks that we like. But we're gonna do the ETF portfolio breakdown tomorrow. We're gonna talk Palantir. We didn't get to today. We're gonna talk General Electric, and we're gonna do covered calls. All that tomorrow, noon Eastern, 12 o'clock on this channel. Subscribe. Hit the subscribe button on the Benzinga YouTube channel. We're gonna do this thing, guys. We're in it together. That's what Zinger Nation is all about. I appreciate you guys letting me do this all day, every day. In the chat, I'm going to spam the link over to Spencer's show. I hear him getting started now, where he's going to do his ETF show. There it is. And of course, I'm going to drop the link to my Twitter here, guys. Go ahead, follow me on Twitter. I try to post in, new stock ideas, some research I do on stocks. And of course, I always pull in analytics from Benzinga.com, trying to figure out what are the most read stories, how can we use that to give us an edge, etc. But without further ado, guys, peace, salute, happy trading. Happy GameStop, happy Roblox. We're going to hit it tomorrow, and I will see you all soon.